I'm here in Dallas for REIT World 2011, NAREIT's annual convention for all things REIT. I'm joined by Trevor Bond, the President and CEO of W.P. Carey. Trevor, diversification is at the core of W.P. Carey's long-term success. But could you elaborate how, in this sort of market climate, diversification really plays to your strengths?
We've invested in some 28 industries at any given time. Any one of our funds might have 20 to 23 different industry types represented within that, so that naturally, as you get ups and downs in the economy, you're going to be, those risks will be buffeted somewhat by this spreading out of the risk. But we also look at diversity in a little bit more of a complex way. We look at, we try to diversify by country, or within a country by region, and so we get the benefits of some of the relative movements that you see in different economies and local economies. The real benefit plays out when you talk about the stretch of time. Having a long-term lease, such as the kind that we typically write, really does take much of the risk of the short-term swings out of our investment. Because if you think about it, with any given dislocation, such as the one that we're currently in, if you have, say, a 5 to 7 year down cycle, and we're signing leases that are 15 to 20 years, we feel comfortable that if we've done our homework, if we've evaluated that particular tenant/credit appropriately, and if we've done it right, that as long as they can continue to pay rent during that 15 to 20 year period, then what happens in the next 5 years matters insofar as you want your tenants to prosper. You want their businesses to go well, but as long as they can continue paying the rent, then we'll be able to deliver income to our investors.
Now, looking specifically at your U.S. holdings, where do you see the best investment opportunities in the coming year?
Our sort of niche, as it were, inside the net lease sector is those stories that are a little bit more difficult to tell. They may be the BBB credits or even below. They may be very good companies that have experienced a little bit of a difficulty at that particular time accessing the credit markets. And so we can step in and provide them with credit at a time when, with a long-term financing option that is, that they might not otherwise be able to get at that particular point in time. And so I think for us the opportunities will continue to be sort of from that opportunity subset. And we're seeing quite a lot of that. So that's really, I would say, our sweet spot, our bread and butter business. But also what we're seeing just recently, Matt, is that in some of the secondary markets where there hasn't been a lot of building, in fact there's been very, very little building over the past 3 years, and so because you've had high vacancies and whatnot, what we're seeing is some very good credits that either want to build a new headquarters campus or take over an existing building and use our funding to renovate it and then occupy that building, so that because we have an extensive build-to-suit experience, we're able to bring that to bear with our dry powder and provide a very quick, sort of very dependable solution for a CFO that's contemplating that kind of a move.
You know, particularly when it comes to Europe, how do you see, I know your leases tend to be longer term, but you know, some of the issues going on may be, you know, are obviously fairly serious. How do you juggle those issues? When
we go abroad, typically what we like to focus on is a slightly higher credit than we might otherwise have done had it been in the U.S. So that we're looking for ways to insulate ourselves from potential problems. And I think that you need to do that because there needs to be somewhat of a risk premium built in to protect you against some adverse outcomes. But what we try to do then is not only just a slightly higher credit, but also we tend to favor multinational companies that have footprints not just in other countries of Europe, but also have footprints in other regions of the world.
Trevor, thank you very much for joining us.
Thanks for having me.
For more from REIT World 2011, be sure to visit REIT.com.